also buzzing on the back of their numbers. But we do have HealthCare Global, which we're going to be talking to. They came out with their numbers. It is the first management on the show. The stock is under pressure after reporting what was a tepid set of Q4 numbers. Average revenue per occupied bed was up 3.5%, but the inpatient bed occupancy dipped. To discuss this and more, we have B.S. Ajaikumar, who's the Executive Chairman of HealthCare Global, joining in. Dr. Ajaikumar, thank you very much for taking the time out. Well, just wanted to start by talking about the ARPOBs, or the average revenue per occupied bed. That's up 3.5%, but occupancies of beds dipped by around 200 basis points in Q4. Is that because the average length of stay is reducing, your outpatient, medical solutions are increasing? Can you give us a reason for this?
Definitely, going forward in oncology, the AOL, the average occupancy is going to come down. And we have XCG, we are very proud that average length of stay comes down and most of it becomes outpatient. So we usually go by footfall and the growth. And we expect going forward, but as we add new beds, obviously, in different areas, our breadth strength is going to increase. But occupancy may be stable or minimally increase as we go forward, because majority of the therapy will happen as an outpatient, which is actually good for the patients. And I think in the long run, it is also brings more efficiency within the system.
Right. That's incredible. Outpatient therapies and the length of stay reducing, particularly in cases like oncology. From a patient standpoint, that's incredible. Let's wonder how that plays out for you in terms of, the financials as well. You're saying that occupancy remains the same or at best declines a couple of percentage points. How much are chemo and LINAC utilization as a proportion of your sales? How much are outpatient as a proportion of your sales? And if occupancies are likely to reduce, then I suppose outpatient revenue will increase, right? So what's the contribution right now? How much does it go to?
Yeah, the outpatient contribution is significant. It may be in the range of about 65-70%. And when you look at even chemotherapy, most of it is done a day chemotherapy. Radiation, of course, is all day therapy. It is only the surgery and people who get into hospital for any complications. And HCG, we are very proud, we don't have that many complications. And that is part of the reason, when you look at our data,
Okay, I think there's something gone wrong with the line. Maybe we can just reconnect with Dr. Ajaikumar. Dr. Ajaikumar,
she's speaking. Yeah, go ahead.
If you could just continue.
Yeah, can you hear me now?
Yes. Go ahead.
What I wanted to say was, particularly in oncology, it's very important to focus on more outpatient, day chemotherapy, even day surgery. For example, even our robotic surgery, 3 to 4 days patients go home. And that is our objective in quality of care when you bring about outcomes are measured. So this is what we are very proud of. But going forward, of course, we are going to increase the bed strength. We are going to add nearly 900 beds coming year because of the new centers and new expansion. But at the same time, our occupancy percentage will not significantly increase.
Okay. All right. Give us a sense in terms of how your specific regions performed. Borivali, South Mumbai. You've set up, operations there. Tell us about what the occupancies, the ARPOB growth and the overall performance was in these two centers specifically.
Particularly Borivali and South Mumbai have done extraordinarily well in this year, particularly the quarter also. In fact, South Mumbai, where we had some issues, has grown significantly over 40%. And Borivali also is obviously it is profitable and the EBITDA margin has improved to over 20%. So these are some of the positive things, but we see a tremendous growth opportunity in Mumbai for us as we move forward. We have taken a lot of measures. And when you look at the time we came into Mumbai and now, we are in a very strong position to take a leadership role in the private sector in Mumbai. And that is how we are even creating hub and spoke model. We are creating outpatient infusion centers. So we have a lot of plans for the Mumbai region to grow because that is a growth opportunity for us. And our ARPOB in Mumbai is over 70,000.
So on an overall basis, what is the kind of ARPOB and margin along with revenue guidance that you can give us for this year? Because you've said occupancies will remain stable, maybe decline by a couple of percentage points. So what does this do to your overall performance?
Occupancy may not decline, but may not grow significantly.
Yes.
But our ARPOB is a growth of 3.5%-4%. We are at about 45,000 and it will continue to grow. As you can see on the curve, it continues to grow. But the good thing is in urban areas, our ARPOB has improved significantly. For example, in Ahmedabad, Bangalore, we have an ARPOB of almost reaching 1 lakh. I think this will continue to grow with a good, healthy margin of the established centers have a healthy margin over 25%. And I think even the new centers, so-called emerging centers, will catch up there. And we expect our margin to be in the low 20s this year. At least 20% we hope we will touch.
Okay, you hope to touch 20% margins this year on a blended basis.
Yes, yes.
Okay. The reason I'm asking you about your Mumbai market performance is because the competition is increasing quite a lot in the Mumbai space. For example, we do have hospitals coming up in Thane. Adani HealthCare has launched. They're looking to launch a hospital, Kandivali. In that context, competition, the number of beds is increasing. How are you probably creating a roadmap to combat the competition? How do you view it?
See, our model of HCG, when we started as a focused factory, very specialty oriented, one thing was very clear. We are looked upon as a destination. When you look at oncology care outcomes, as an oncologist, I can very say that outcomes are the best when you go to dedicated oncology centers. So because of that, our referral pattern, our footfall continue to increase in spite of multi-specialty hospitals starting, oncology centers. So we are very confident that our growth strategy is there. If you look at, for example, Borivali, we have a significant growth upside as we move forward in an enormous population base and the type of cancer we see as a destination. Because most of our cancer patients who come for our tumor board, second opinion, growth is all big. Majority of them also are recurrences and significant new patients are coming. And when we put out our outcomes, obviously that will also bring in patients. So we feel awareness of cancer is going to increase. And with that and the number of cancer patients significantly increasing in the urban areas, I think our growth strategy is very much in place.
Okay. Well, you do have KKR, which has taken over. Any kind of synergy integration that you can talk about, CVC's remaining capital, anything in terms of remaining stake, anything in terms of monetization?
No, I am staying with my percentage. I am not changing that. As far as KKR is, as we have announced, the transition is happening. Hopefully, in the next few weeks, the whole place will happen. And of course, we will make necessary announcement when everything falls in place.
And you are staying at the helm as well, right? Irrespective of what KKR does.
Yes, the chairman. Yes.
Perfect. 10.4% is what you hold. You will continue to hold on to that. KKR comes in sometime next week. You will give us an update on that. And let's hope there is no immediate supply event with CVC holding about that 9% stake as well. Is there one?
Yes, CVC will continue with the stake, but again, we have to see how the open offer goes and all that. If any changes will happen at that.
Take that point. Thank you so much, sir, for joining in and giving us the business outlook for this year. 3.5% ARPOB growth with blended margins turning 20% is what your guidance for this year is, with occupancies remaining stable at the 58% mark itself as contribution from outpatients increases. With that, let's move on and tell you what we're excited about. We're excited to unveil our brand new global business news channel. CNBC-TV18 presents an all-new CNBC-TV18 Prime. It brings you the insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC-TV18 Prime decodes global shifts and their impact on Indian businesses, giving you an unparalleled insight. Tune into CNBC-TV18 Prime at 12 noon today for the Global Reset and Global Lens at 8:30 p.m.